And about 2 minutes away from the end of the trading day, Katie Greifeld here with Scarlet Fu. Romaine Bostick out on assignment, and here to help take us through the closing bell, we're joined now by a global simulcast, Massar and Tim Stenovec. We bring together all of our different audiences right now, television, radio, YouTube, count the ways, Carol, and it seems like we're going to finish out on the lows of the session.
Yeah, we're actually just in these final few minutes of trading, we're seeing another leg down on the major equity averages. Funny, in a day where we actually saw the S&P on an intraday basis hit another record high, but that's not to be. I don't know whether maybe investors getting a little nervous about tomorrow's jobs report.
That's that why Bitcoin's moving lower?
Well, you tell us.
So we're actually, for much of the last few days, we were just hovering around $70,000. But Scarlett, we seem to have fallen from that. Bitcoin down 68,750 roughly right now.
Bitcoin is not really correlated with any asset beyond risky assets in general. So we're told, yes, absolutely. What's also notable, I should mention too, is that volume is lower. Volume in the S&P 500, for instance, off 15% from the 10-day average. So I don't know how much you can read to the fact that we have hit our session lows right now.
Yeah, that's the thing. I mean, it kind of feels like we're in a wait and see sort of moment on this Tuesday. We got some data this morning. The big report, of course, is tomorrow, Carol, when it comes to that jobs report, not just the numbers themselves, but also the revisions closely watched.
Yeah, it's the Fed dual mandate this week. We get jobs tomorrow, and then, of course, we get inflation on Friday. So we'll see what it means in terms of what it says about the U.S. economy.
Meanwhile, you hear the bells ringing right now as we close out the session on this Tuesday. The S&P 500, as I mentioned, going to finish not quite at its lows of the session, but pretty close, down about 0.4%, depending on the second. The NASDAQ down about 0.6%. The Dow, for whatever reason, higher by about 0.1%. How much can you read into it? It has just 30 members, and again, it's price weighted, but nevertheless, we like to look at it. Meanwhile, you take a look at the small caps. I believe they're on that screen next to what we're looking at right now, sort of fitting in with the broader action as well, Carol.
Yeah, just taking a quick check at the Russell 2000, down about 1/3%, so definitely off its highs of this session. Having said that, Scarlett, you've got most names actually the S&P 500. The big caps higher today, about 301, 200 to the downside, and 3 unchanged.
All right, so let's take a look at the IMAP, or the circle, as Katie likes to call it.
Thank you.
We do have utilities, one of the smaller sectors in the S&P 500, leading gains up 1.6%. Real estate investment trust up 1.4%. Materials gaining 1.3%. These are not big, weighty, influential sectors in the market. Healthcare, commercial communication services, and financials are the leading decliners, and that's why most of the pie is red. I call it a pie.
Matt did too.
It does look like a pie, a red pie. Let's go to some of the individual gainers, because I had a pretty good list to choose from. Let's go to the number one gainer in the S&P 500 and the NASDAQ 100. We're talking about Datadog, ticker DDOG. Software company's fourth quarter results beat expectations on key metrics. It also gave a full year forecast that was weaker than expected, but analysts see it as somewhat conservative. Keep in mind that this stock is one of many stocks that have gotten caught up in a broad-based sell-off of software names. It's down more than 40% from its November peak, but some bounce back today. Again, just up shy of a 14% gain today. Let's go on over to Spotify. A lot of folks talking about Spotify here at Bloomberg today. At its high, up almost 20%, finishing the day with a gain of almost 15% here. I believe it's the biggest intraday gain, and I'm not sure about the close here. I have to look at that, since about 2018. So we haven't seen this move in a long time for this name. The company, the music streaming giant, added a record number of users last quarter, far surpassing analyst expectations. So adding some 38 million new listeners from October through December to reach 751 million, according to a statement today. And the company crediting its annual Wrapped campaign. But I heard that it didn't actually work for Tim.
It definitely didn't.
It said that you actually were...
I can't remember exactly what it said, but it was just...
What did it say?
It said like, I think
that he listened to music of old people?
That's me, so
I'm gonna have to
we're in
find
cahoots
this.
Together.
It's just, if you go and look at my top songs, it's like,
It doesn't track? It doesn't
track, yeah, it's very, very strange.
Fleetwood Mac, Beatles.
No, and I love that stuff. I love that stuff, but it's like, it's a lot of Bon Iver.
Maybe you learned something about yourself, You gotta be open to this stuff.
Embrace embrace it, Tim.
Yeah.
It's okay. We still love you. All right. And now for something completely different. It's a good thing Romaine isn't here because he'd probably make fun of me. Small cap space. We're talking about European Wax Center. We don't talk about this a lot. It's a $312 million market cap company surging 43%, so pretty much finishing at its best levels of the session. Company agreed to be taken private by General Atlantic. It's an all-cash transaction, and it valued the company at approximately $330 million, and the stock now up about 60% year to date. All right, over to you.
Okay.
Fan of 50, 60-year-old.
Let's start with what's going on with Alphabet, ticker GOOGL. This was one of the biggest weights in the S&P 500, down 1.8%. I wanted to take a look at this after Alphabet had raised almost $32 billion in debt in less than 24 hours. What it does is it shows all the funding needs that tech giants have, and they're competing to build out these AI capabilities. The company sold sterling and Swiss franc dominated offerings, both of which were the biggest ever corporate bond sales in their respective markets, demand being high across those deals. And it does come after Alphabet said its CapEx will reach as much as $185 billion this year. So $32 billion in 24 hours, kind of a small drop in the bucket in terms of total CapEx that will be spent this year, but meaningful nonetheless. Also, shares of Coca-Cola declining on the day today. The company gave a full year outlook for 2026 that saw organic sales growth, or sees organic sales growth at 4 to 5%. That's just slightly less than what analysts wanted to see. It's a little more conservative. There are some challenges winning over shoppers with portfolio of beverages. Consumers are switching away from traditional full-calorie Coca-Cola toward healthier options. The company sees momentum in some markets and challenges in other markets. The World Cup expected to boost sales in Mexico, which is hiking a tax on sugary drinks. And finally, this is really interesting. Wealth management firms today took a hit. They turned lower after Altruist launched a new tax planning offering within Hazel, its AI platform. So look at this. Charles Schwab down 7.4%. Raymond James down 8.8%, Katie.
Meanwhile, let's get quickly over to Ford earnings, just crossing the wire here. When it comes to the fourth quarter, adjusted EPS coming in at 13 cents. The estimate had been for 18 cents. Meanwhile, you take a look at 2026 adjusted EBIT, seen between $8 billion to $10 billion. The estimate had been for $8.86 billion. So the midpoint of that range ahead of the estimate here. You can see shares trying to decide what to do. Of course, Ford has been on a tear when it comes to the stock performance as of late. It's going to be interesting to dig a little bit deeper into these earnings. We remember, of course, that Ford has been significantly scaling back on EVs. We're starting to get more commentary out of the company soon.
All right, we also have earnings out of Robinhood, and that stock is plunging in the after-hours trade right now, losing about 7%. This is after its fourth quarter net revenue missed analyst estimates. $1.28 billion was the print. Analysts were looking for $1.35 billion. Fourth quarter adjusted EBITDA was $761 million, also lighter than the anticipated $833 million. In addition, fourth quarter average revenue per user, ARPU, was $191. Analysts were looking for something above $200. So again, the stock losing ground right now, off by 6.25% in after-hours trade.
All right, Scarlett, we've got another name losing ground in the aftermarket, and that is Lyft. And that's despite authorizing a new share buyback up to $1 billion. But let's go to the outlook, because that's probably what has investors a little upset here. Lyft seeing first quarter adjusted EBITDA of about $120 to $140 million. So it looks like they're reducing some of the range, a lower range. The estimate on the street is at that $140.5 million. As for the first quarter, in terms of gross bookings, about $4.86 billion to $5 billion. That's the forecast. On the street, they're looking for $4.93 billion. And again, just looking at fourth quarter, let's go back to the quarter that was. Fourth quarter adjusted EBITDA, $154.1 million. That is better than the street estimate of $146.6 million. Fourth quarter revenue, that came in light, $1.59 billion versus a street estimate of $1.76 billion. And fourth quarter active riders, 29.2 million. That is bang in line with what the street was expecting. Investors not impressed. Stock down about 15% here in the aftermarket.
Okay, I'm looking at what's going on with Zillow Group. Shares bouncing around a bit. The company did meet estimates in terms of revenue, but the outlook is what everybody cares about. First quarter revenue set to be $700 million to $710 million. So It is a beat there in terms of what analysts wanted to see, 691.2. First quarter adjusted EBITDA will be 160 to 175 million. That is shy of what analysts wanted to see. They wanted to see 182.7 million. The company, once again, did beat on fourth quarter revenue. The company came in just shy when it came to rentals revenue. Fourth quarter residential revenue came in just above estimates, and fourth quarter mortgages revenue came in above estimates.
All right, guys, let's go back to Ford.
Shares down about 4.5%. Sorry.
Ooh, forgive me. No. Ford bouncing around now, down just about 0.5% here. A little bit of commentary. We remain relentlessly focused on three key levers to improve margins, improvements in EVs, highly accretive anti-cyclical businesses that grow and change our risk profile, and next generation core products. So $1.5 billion of fiscal year 26 CapEx to be used to begin ramping Ford Energy. So look for some questions on the call, a little bit more context, if you will, on that. All right, guys, that's a wrap. A bunch of earnings. Ford now up about 0.6%. So as we said, bouncing around here.